Good morning, you cheeky bunch. Today we are discussing what's going on with Bitcoin, discussing the price action and where I think things are heading. Let's see if we can smash up that like button up towards 500 likes, guys. Really do appreciate that. If you are new to the channel, welcome. This is Cheeky Crypto. My name is Nick and we are discussing Bitcoin. Subscribe if you want to stay up to date with more content from the channel. Let's jump right down into today's video. BTC paired up with USDT. We're on the one-day Binance chart. And things are progressing quite nicely. So following on from the previous videos, we had that idea for a breakout, right? So we're talking about if we were to get a closed position above our 50 exponential moving average, 50 simple moving average, so the simple moving average being the yellow line here, what we'd do is we'd be looking for a good entry, tight stop loss underneath the 50 simple moving average, and we're targeting out that slightly higher range as indicated in the yellow box. This is looking pretty healthy right now, right? So we can see here we're in good profit. The risk reward ratio is about 3.52, and it's looking pretty good on the daily time frame, right? So all looking good from that kind of idea that we're talking about, how we like to trade breakouts or breakdowns. There's two different ways that we could have looked at this. The exponential moving average breakout, which is the blue line down here with a tight stop loss underneath, and again still targeting out that higher range, would have been a greater risk reward ratio, but you wouldn't have had confirmation. Would have been 5.63, and of course we had the one for the simple moving average, the one that I probably would have taken here. So knowing this and knowing our target is still 69,700 to 72,200, we're in a pretty good spot, right? There's still some potential for a bit of a move to the upside. Now this is a relief rally that we've been discussing for a while. It's a three-wave pattern. Elliott-Wave theory, of course, is very accurate if you do it correctly. If you do not draw it correctly on a highly liquid market like Bitcoin, then unfortunately it does have a tendency to fail. Its failure rates are not due to its properties as an analytical tool. Its failure rate is due to the analyst, right? So you're never going to get it right 100% of the time because you can obviously see lots of different patterns and potential patterns inside the candlesticks. And obviously there's lots of rules to kind of think about when it comes to Elliott-Wave theory. I am looking at this as a three-wave move to the upside, and so far it's playing out incredibly well as per the rules of Elliott-Wave theory. As I've said many times before, Elliott-Wave theory is absolute. It always fits. You can try back testing it and it has a 100% fit rate because it is designed to do that. And you have to identify the correct pattern for what is happening in the future, right? That's the difficulty, and that's why so many people draw it incorrectly. They allow for their bias to come in and they don't actually allow for the rules of absolute to actually filter through. Okay, so knowing the Elliott-Wave theory is looking pretty good, we obviously had the breakouts of the 50 daily SMA, the 50 exponential moving average, the EMA here. Everything's kind of looking quite nice to head up towards our downward trend line, which is this upper area. We hit this area on the 14th of March and on the 8th of April, and I think we're going to come right in line with our targeted range here on this trend line. So 69,700 to 72,200 or 72,167 to be more exact. Now, with this move to the upside, it's worth noting our minimum expectations have already been met. We don't have to go up higher, but that is the area that Elliott-Wave theory tells us is the most likely. Okay, so we have already broken the previous swing high over here on the 6th of May. Okay, so by going higher than this area, we have already met the minimum expectations and have already kind of met those minimum expectations of a three-wave move, right? It can just fall short of its expected and typical range, which is up here between that $69,000 and $72,000, right? So that's kind of where I think things are heading. Now, taking a look at the momentum indicator, we're already heavily overbought on the daily time frame, but we can still be here for a little bit longer. We don't have to move all the way down to oversold just because we're up here, but we are, of course, reaching those upper areas at the moment. We are, of course, up there at 99.32. 100, of course, is max, yeah, we will see reversals here. Now, we can be up here for quite some time. I mean, for example, in this particular case over here, it's the 9th of February. We didn't see major movements until the 17th of February, right? And that was on this move to this higher side. If we take a look at actual moves up here, we could see that it's actually the 29th of January through until the 16th of February, right? We started this move on the 14th of May. It's currently the 19th of May, so we're a little bit way through it, right? Obviously, at the same time, we can come straight away back down, right? We can be up here and then all of a sudden just drop all the way down. This is because the stochastic RSI does not give you an indication to price movement. It's only showing you whether or not there is momentum behind the price action. And at the moment, with momentum indicator being overbought the way that it is, it shows us that there's the potential now, a higher probability that the market is going to reverse, right? It's likely to move down. Now, Elliott wave theory tells us that we have a little bit more progression to the upside, and I think that's really where we are likely to see this thing go, a little bit further to the upside before we get that reversal to the downside. But we are looking for a reversal, okay, nonetheless. Now, if we come back into our stochastic RSIs, turn them off and turn on the divergence indicator, this yellow line is the relative strength index, right? And this is good for a trend. Unfortunately, we're not in a trend at the moment. We're in a continuation pattern. So the relative strength index isn't going to give you a huge amount of advantage in trying to predict where the price action is going. But it is above the 50 level. So again, on a macro scale, we are still bullish. And I agree with that. But we are still in that continuation pattern, meaning that we are likely still to see more volatility, with market makers basically extracting a lot of liquidity out of the market. I don't think we're done just yet. As much as I would love us to just kind of go up into new all-time highs and be done with all of these moves to the downside, I suspect the market makers have other things planned. And so we should be very mindful that this market is all about extracting liquidity during these continuation patterns. They're not ready to pump it up after seeing such significant surges to the upside at the moment. And there's huge opportunity in all of that, of course. Now, if we go ahead and back into our price chart here on our daily time frame, you can see that my expectation is to test that lower trend line. That lower trend line will be in line with our 200-day exponential moving average, which is currently sat at 53,836. And I know some people will disagree with me, thinking that that's just not likely to happen. But I do see this as a three-wave corrective pattern taking us down towards our 200-day exponential moving average. And this continuation pattern, this bullish flag, however you want to look at it, will then actually continue to set the lower highs and the lower lows before we get that break to the upside. The importance of the 200-day exponential moving average cannot be ignored. Now, it's possible that we can ignore it for a little bit longer, and we did over here, for example, in January of 2024. But for the most part, this is an area that's usually very key for finding support, right? You might come down briefly and then rally up from it, right? The 200-day exponential moving average is your trend filter. It's critically important that we don't ignore this, that we do need to find support on this level. So I'm hoping that, we don't have to come down all this way, but I suspect we probably will. And we have this idea of a three-wave corrective pattern. And the reason for that is that Elliott wave theory tells us that we're not in a trend to the upside here, simply because we were in a three-wave pattern, right? We haven't actually got any clear breaks above 1.618 on the Fibonacci extension scale, indicating that unfortunately things are not what they might seem. I know a lot of retail investors who look at a lot of other indicators and they'll be saying, yeah, we're bullish, we're bullish, we're bullish. But on our daily time frame, although we are bullish on these macros, we have to expect more volatility because we haven't seen the right structures, the right candle patterns to say that we are likely to get that next clean break to the upside. Where would my thoughts and opinions change on this? Well, a new all-time high would definitely do that. Not a guarantee, but I think it would set the idea and the stage for those 1.618 impulsive trigger points to get hit. So that's kind of what we're going to be looking for here. We're going to be looking for a clean break above our trend line into new all-time highs. If we see that, we'll go long, we'll tight stop loss, and we'll target out probably towards $82,000, something to that effect to start with, and probably put a trailing stop, just follow the price action as it moves up, because we go into price discovery at that point. But if we do not see that, then and we actually get rejection here on our trend line and from our expected range between 69 and 72, well, the obvious thing there to do, of course, is to short the market, tight stop loss above our previous swing high for security reasons. And of course, we target down towards that 200-day exponential moving average, right? Again, risk reward ratio about 5.98. This means that it doesn't really matter what the price action does, right? All we're really doing here is saying, okay, we're going to break out, we're going to go long. And if we get rejected, we're going to short the market, right? And we're going to make money either way. We don't really want to be kind of, just saying, oh, we can only go long. We're bullish, it's a clear breakout, the sentiment's bullish. That stuff isn't inside the data. The data is very clear to us. We do not have a clean breakout here where we have the idea of a structure that is impulsive and is in a trend upwards, okay? But if we get a breakout, that changes. And so if we had the breakout, we can go long. If we don't get the breakout, then we can go short and we can make money. Okay, this is important that we understand. We just want to trade against the sentiment to a degree, and we want to make sure that we're on the right side of the argument. Now, market makers are great at this because they have significant control over the markets, right? Not just Bitcoin, but also the altcoin market. Everything moving in tandem is not a coincidence, right? And so when you find the liquidity in the market, things start to make a lot bit more sense. If we take a look at our volume profiles from the VPVR, now this is obviously only taking into consideration the candles that you see in the chart at the moment. If I zoom out of this just a little bit and get some more candles in, you can start to see that there isn't a lot of volume here in relation to the historical price movements. A lot of the volume is down here at this lower range. And this is a huge concern because there's a lot of liquidity in and around these lower areas. Okay, market makers know this. Market makers are going to be looking at those areas and wondering whether or not they can actually push the price down there. Now, don't think they're going to be that extreme, but if we were to see something crazy from the US government, or more specifically the Fed, then we might see, some extreme volatility that does, create some imbalances in let's say the DXY, the DXY, in relation to all assets, right? Because everything that's paired up against USDT, of course, is stable against USD. And of course, if we see any price fluctuations with the DXY, or any adjustments or fluctuations with the DXY due to, say, Fed interest rates and things like that, all the things that we talk about with our members down on our Discord server, then we are likely to see extreme volatility, which market makers will capitalize on. So we will need to be aware of those things. Now, we don't talk about them very often in these videos on the public side of things, simply because we talk about it quite a bit for our members in our AMAs and that kind of stuff. And as you can see, down here at $42,000, there is a lot of liquidity to be seen. So be very mindful of where the previous volumes were. Obviously, you can take a look at the shorts, the longs, all that kind of good data, and see where that kind of stuff lies as well. From a smart money concepts point of view, we're still in bullish pattern on the daily time frame. We're not concerned about any of those things. All of that is looking very healthy and very good. So yeah, for the most part, smart money concepts is fine. There are, of course, still pockets here of fair value gaps that haven't been filled, so we're going to be mindful about those. Basically all these green areas that you see on the chart here, these are showing you where there was a lack of liquidity and price likes to come back down and fill those out. For example, there's a pocket right over here, and if I pull this across, you can see that price came down and filled that pocket where there wasn't liquidity before. The market put liquidity. Okay, and so there's a few areas on this move to the upside most recently where again there's pockets of illiquidity, as in the market didn't have liquidity, so the price has to go up higher to find the sellers and so forth, right? And so as we can see here, there's going to be a reversal more likely to fill out those areas. There's also one down at this lower range between 51 and 54,000. It's not a coincidence that this is also where our lower trend line is, also where our 200-day exponential moving average is, and also the area of a three-wave correction that we are likely, in my opinion, to see. This means that we fill out all the fair value gaps that you can see here from a smart money concepts point of view. So whether you are a fan of Elliott wave theory, whether you think it's absolute garbage, maybe you're a fan of smart money concepts. Smart money concepts is also aligned to the idea that we still have this correction to the downside. We're still in a bullish structure on a macro scale. None of that has changed, but there are some fair value gaps that typically do get filled out. It's not a guarantee. They have a high probability of getting filled out though. So just bear in mind that there's nothing as a guarantee in this space, but there's a high probability that we do see these moves to the downside. Elliott wave theory, smart money concepts are telling us, even the trend lines with the lower highs and lower lows, they are all telling us that we are likely to see more continuation of this pattern. Then, of course, we factor in the real world, what's going on with the Fed over in the US, the CPI data. All of these things are going to have an impact. The DXY will have its role to play whilst demand is low, which it is. And once demand comes in, the DXY has less impact on the price action. So just bear that in mind. Sometimes the DXY will go one way and Bitcoin will just simply follow it, right? And that is due to a significant demand shift, okay? So all in all, it's looking pretty good on the daily time frame, and I'll turn smart money concepts off here for now as well. If we throw on the Gaussian channel on the daily time frame, it did turn red, indicating that this is an area where we want to be dollar cost averaging because value is now there for kind of purchasing up. But we are above the mid band, but we are not above the higher band in terms of these simple moving averages that you see within the Gaussian channel. Okay, very interesting stuff. Roll this up into the weekly. Again, you can see a nice weekly candle here for BTC, still heading out towards our targeted range of 69 to 72 before we move on down. The move to the downside will coincide, in my opinion, with the 50 weekly exponential moving average and the 50 weekly simple moving averages, right, which were last tested over here in October of 2023 and found as support. As you can kind of see, we haven't tested these supports of the exponential moving average or simple moving average since 2023 on the weekly time frame. The Gaussian channel is looking pretty good as well. We are heavily above the Gaussian channel on the weekly time frame. This is indicating a pretty good healthy stuff since we saw this kind of breakout, clean breakout really in October of 2023, again all around when we found support on the 50 exponential weekly average. So all in all, that's looking pretty good as well. Throw on the VPVR, you can see that the volumes are significantly lower. There's pockets where there's just simply isn't any volume on this weekly time frame, and you can kind of see that right in there between $53,000 and $57,000, and that's why we see these bigger candles in the market here. Smart money concepts will align if I throw that on as well. You can see right here where there's a pocket where the VPVR is showing no volume on the weekly time frame. It also happens to be where there's a fair value gap on smart money concepts. Again, all an indication that there is a lack of liquidity at certain price ranges, and we are likely to get that filled out. And it's no coincidence, once again, that these are the areas on the weekly time frame where we can quite clearly see that there's a lack of liquidity between 53,000 and 58,000. This particular area happens to be right in line with the three-wave corrective pattern on Elliott wave theory, right in line with the 200-day exponential moving average. Everything is kind of showing us that this is an area where we're likely to see the price action go. Now, we hope that that's not the case. We hope for the breakout because we want to be bullish on the market, but the data is quite clear to me that we need to be very mindful that there is a correction to the downside to come. Now, guys, you can let me know your thoughts and opinions in the comments down below. And if you haven't done so already, smash that like button and check out this video where we discuss what's going on in the crypto space.